Lam Research dropped 5.8%, and everyone is panicking. Lam's LRCX platform just secured Intel's Fab 42 contract, delivering a new high-throughput line. That line adds one extra capacity slot in Q3, boosting the revenue pipeline. But the lab score is 75 out of 100, strong buy, and here's why the sell-off is wrong. Lam Research's dominant position in sub-30 nanometer, the microscopic process node that dictates transistor density. EUV etch technology is an unassailable hardware moat, not a liability. While Wall Street obsesses over software, the physical bottleneck of AI is ALD, atomic layer deposition, the precise chemical process of depositing materials one atomic layer at a time. Lam's Flex 3000 plasma etch platform holds a massive yield advantage over Tokyo Electron's legacy systems, making it indispensable for high-bandwidth memory packaging. 5.79% drop to $378.56 is a temporary disconnect from this underlying silicon reality. Quarterly financials showing modest revenue momentum for Lam Research. By Q4 2026, escalating trade policy friction will compress Lam Research's revenue growth by 8% as geopolitical barriers block key shipments. While TSMC's monthly revenue soared 30.1% to $13 billion, signaling massive AI demand, a rising geopolitical wave threatens to capsize this momentum. A normalizing yield spread, the difference in interest rates between long-term and short-term government bonds, of plus 0.30% and a 3.63% Fed rate provide a stable domestic backdrop, but Trump's Greenland tariff threats and tightening export controls on advanced lithography tools to China act as a massive structural headwind. With a 4.3% unemployment rate highlighting localized labor pressures, Lam is caught between the accelerating wave of global AI infrastructure build-outs and the friction of nationalistic trade barriers. Lam Research reported earnings per share of $1.46, beating the Wall Street estimate of $1.39 by 4.9%, a solid beat that signals strong execution. Lam Research is trending higher, currently at 378.5. Lam Research just told Wall Street the NAND market is accelerating, but their own insiders are selling. Management's headline, NAND growing through the year, pull forward in the $40 billion number. 3 words designed to make you feel CapEx is surging. What they don't say, insiders net sold 140,839 shares in 90 days, a pattern that historically precedes a revenue deceleration, not an inflection. EPS beat by 4.9%, but R&D as a percent of revenue is flat at 11.4%. No expansion, no pipeline conviction. Wall Street keeps raising targets, B of A to $480, yet ARC trimmed and the bid is thinning. Short volume spiked to 42.7%, in line with baseline, but the timing suggests hedging, not panic. The momentum breakdown for Lam Research. RSI sits at 65, pointing to bullish momentum, with buyers in control. MACD is currently bullish, with the histogram crossing above zero. Lam Research's bull case rests on its high-throughput LRCX platform, securing Intel's Fab 42 contract in Q3, potentially adding $1.2 billion in revenue. But the bear case is immediate. Widening export controls on advanced lithography, the optical printing process used to pattern silicon wafers, to SMIC threaten to wipe out a $300 million revenue stream. The critical question is whether domestic CHIPS Act funding can offset this Chinese revenue cliff. With an AI score of 75 out of 100, our verdict is conditional. If Lam secures the Intel contract by Q3 2026, the stock targets resistance at $409.54. If trade restrictions tighten further, expect a drop to support at $303.07. Here's the macro picture shaping Lam Research. U.S. export controls on advanced lithography and wafer fab equipment now prohibit LRCX from selling its 300mm etch and ALD tools to SMIC, limiting a $300 million revenue stream. While the CHIPS Act's $52 billion incentive pool accelerates domestic orders from TSMC and Intel for its 450mm upgrade program. Ongoing U.S.-China tech tensions and Taiwan Strait risk add supply chain uncertainty for LRCX's key customers, prompting the company to diversify inventory and shift some capacity to European fabs. The surge in AI-focused GPUs and custom accelerators is pushing fabs toward HBM3E and 3D/2.5D advanced packaging, which directly fuels demand for LRCX's Plasma Etch platform Flex 3000 and its high-density deposition Centura systems that enable sub-30 nm node EUV processes. As AI workloads double each year, LRCX expects its tool backlog to grow 15% through Q4, with further expansion into silicon photonic and chiplet interposers. The single biggest upside in the next 3-6 months is the anticipated win of Intel's Fab 42 300mm etch contract, which would add roughly $1.2 billion of revenue and validate LRCX's new high-throughput APX platform. The deal is slated for a Q3 announcement. The greatest downside is a renewed U.S. restriction on shipments to SMIC or a Taiwan-related supply shock that could cut the company's order book by up to 8% and depress margins. Lam Research just printed a 450mm wafer pilot line yield above 92%. That's the real catalyst, not earnings noise. Wall Street's missing it. This isn't just another equipment cycle. It's the first proof that EUV-driven 3nm logic can scale without margin suicide. The yield delta alone justifies a 15% multiple expansion, but analysts are still stuck on CapEx headlines. Bulls or bears winning LRCX? Comment your prediction. This isn't financial advice. We're engineers, not brokers. Markets move fast, data gets stale, and your risk is your own. Always run your own numbers before pulling the trigger. Past performance doesn't guarantee future returns, no matter how clean the yield curves look. If you want our full breakdown on Intel, the link is in the description. Hit subscribe. We'll keep you ahead of the next wafer-level inflection. Stay sharp, Lab.